Kieran from Crypto Booze here. Welcome everybody. It's the 10th of June 2019 and I've got some juicy news to keep you up to date on what happened in the last few hours, last few days in the cryptocurrency market. So let's cut to the chase and start with the G20 meeting. Ministers discuss crypto benefits and commit to risk-focused vigilance. By CCN Markets, global finance ministers and central bankers reconfirmed their multilateral support of crypto industry regulations on the weekend in Japan. They were attending the G20 Finance Summit ahead of the Leaders Summit in late June. There were no surprises for the cryptocurrency markets in the communique sent out by Japan's Minister of Finance on Sunday. The 14-point document reflects the outcomes of the weekend discussions. Key points to take is while crypto assets do not pose a threat to global financial stability, at this point we remain vigilant to risks, including those related to consumer investor protection, anti-money laundering laws, and countering the finance of terrorism, CFT. So nothing new. These have been very big topics in concerning regulations for a while. So nothing new on that. In that regard, regulators need to avoid overregulation. That's very important so that adoption can take place. So G20 leaders reconfirmed their commitment to a globally consistent regulatory environment. There's widespread recognitions by regulators and crypto market participants alike that the industry will be best served by responsive regulation that safeguards participants. The thing about the safeguarding participants, I'm not too happy about that, especially that expression, because basically what that means is if you're not an accredited investor, very often you cannot participate in many investments. And yeah, it just means that if you've got the cash, then you can make money work for you. But if you're not an accredited investor, then very lucrative investments are not possible for normal retail investors. And I think that's a shame. And very often it gets put in the way that they say, it's just to safeguard participants. But in my opinion, it's just to make sure that money stays where money comes from. Talking about cyber regulatory resilience is much needed as crime rises. In a communique, leaders did commit to continuing stepping up efforts to enhance cyber resilience and welcomed progress on the Financial Service Board initiative to identify effective practices for response and recovery from cyber incidents. And of course, that's very important since the amount of cryptocurrency hacks has been increasing. As you have to be careful with your keys and with two-factor authentication, and maybe people coming into the space are still not aware of what kind of security is needed, especially if large sums of money are involved. Now, G20 backs crypto initiatives already underway. Meanwhile, leaders committed to applying the recently amended Financial Action Task Force standards. They welcomed the International Organization of Securities Commissions, IOSCO, work on crypto asset trading platforms. They called on the Financial Services Board, FSB, to monitor risks and consider work on additional multilateral responses as needed. So the G20's consistent multilateral regulatory approach is welcome. Crypto regulations currently vary from country to country, and Japan and South Korea have adopted crypto-friendly regulatory approaches. I like to see that. It's very positive. Now, the whole view of this news, and mainly news talking about the G20, is in a positive light, and I'm happy to see that. Very happy to that growth and the views are tending to shift from a negative and neutral perspective to a more positive perspective. Now, of course, many people and politicians and countries, they want to make sure that cryptocurrencies are not used for money laundering and so on. And Yeah, that's been very often arguments against cryptocurrency in general, that is being used for money laundering and so on. But in my opinion, at the moment, with the current regulations, it's actually quite difficult to launder money with cryptocurrency. And in my opinion, it's also going to be even more difficult as more regulations take place. But we have to make sure that there's not an over-regulation, as that would defeat the whole decentralization of cryptocurrency. And that definitely wouldn't be very good. Now, continuing with Cypherpunk Adams, also with the G20, and he speaks of blockchain benefits at the G20 meeting. So Adam Back, who invented the Hashcash proof of work system and was one of the first people to work on Bitcoin, spoke about the positive uses of blockchain at G20. And Cointelegraph Japan reported on Back's comments at a meeting of finance ministers and central bank governors. When speaking in Fukuoka City at the seminar entitled Multi-Stakeholder Governance for a Distributed Financial System, Back said BTC and other crypto assets are the electronic cash for the global internet world. He added, I don't see it as a large enough to affect monetary policy for major currencies like euro and Japanese yen. Now, I think that's also very important to add, because at the moment the market is so small that it would definitely not have large effects on regular traditional fiat currencies like the European euro and Japanese yen. And the cryptocurrency market would have to increase by a large market cap before it actually influences the different fiat currencies. But let's see how that develops. Back's attendance was defended by Junei Murray, a University of Tokyo professor who moderated the discussion, and he said it was meaningful to show a place where various stakeholders gather to build a decentralized financial system, and Japan's Financial Services Agency has described Back as a legendary cyberpunk who was able to facilitate useful discussions about the role that crypto and blockchain can play in the future. Back is also the founder and CEO of Blockstream, a blockchain development country. So, in my opinion, I think it's pretty good that he mentioned the monetary policy, and that cryptocurrency doesn't have at the moment a major effect on traditional currencies. And I think it's important to make sure that politicians and governments realize that it's not a threat. But as the cryptocurrency market is going to increase, in my opinion, the policies are also going to be put in place, because at the moment it's not seen as a threat, but it's possible that will happen if the market grows like a tenfold or 100-fold in the next few years to next decade. So it's not over, but the sentiment is positive, like I mentioned before. Now, talking about Russia, the Russian parliament considers imposing fines on crypto mining by end of June. Unfortunately, this is not so good news, and let's see if they also explain why. So Russia's parliament, the State Duma, is considering imposing administrative responsibility for the mining of cryptocurrencies, local news outlet has reported. In an interview with Task, Anatoly Aksakov, the chairman of State Duma Committee on the Financial Market, said that the government may introduce administrative responsibility for digital currency mining by the end of June. And he says, I note that any operations with cryptocurrency that are contrary to the Russian legislation will be considered illegitimate. This means that mining, organizing issuance, circulating, creating exchange point for these tools will be prohibited. Administrative liability in the form of a fine will be incurred for such actions. We believe that cryptocurrencies created on open blockchains such as Bitcoin, Ethers, and others are illegitimate tools. Aksakov, however, stressed that despite the mining ban in Russia, it is still possible to own BTC if it was acquired under foreign law at foreign sale and exchange points. He also suggested that the mainstream interest in Bitcoin could appear again once the speed of transaction increases. Now, Russia has since further postponed the adoption of crypto legislation due to a requirement from the Financial Action Task Force on Money Laundering, FATF, concerning the addition of the crypto-related terms. Now, the question is, what purpose? In here, there's no purpose on this legislation, as far as I can see. My hypothesis is that they're either trying to, they're scared of new digital currencies which they cannot control, so they want to regulate it before it actually becomes a threat or a too big threat to control. The second thing would be they're either trying to put their own digital currency on the market, like a digital ruble or something like similar to what India is trying to do, and to bulldoze their way into the market. They basically put a blanket bang on the whole digital currency landscape to make sure that their digital ruble their digital ruble is successful. Now, of course, this is just speculation. I don't have any facts about that, but it's interesting to see how this plans out. Unfortunately, it's not such positive news, so we have to see how this plans out. And but the good thing is that it's still legal to own Bitcoin and so on if it was bought outside of Russia, and if I'm not mistaken, also on legal exchanges. So let's see how this thing plays out, and let's continue talking about Iran and energy mining. So Iran's energy minister wants crypto miners charge real electricity prices, and I think this is fair, especially since much of the electricity is subsidized in Iran. So it's only fair that miners who profit from these cheap prices should also pay they profit from these cheap prices to mine Bitcoin and then gain unfair advantage. They should pay the real prices and not the subsidized prices. And the deputy energy minister of Iran has said that electricity bills for the digital currency miners should be calculated in accordance to real prices, which makes sense. Iran's deputy energy minister Hamayoun Hari has stated that electricity bills for cryptocurrency mining activities should be priced according to the same rates established for power exports. The government reportedly pays nearly $1 billion in subsidies annually to bridge the gap in real electricity costs. Iran has demonstrated a positive stance towards crypto mining last September, when major government authorities, including the Ministry of Information and Communication Technology, the Central Bank, the Ministry of Energy, and others accepted crypto mining as an industry. So, all in all, I think it's fair that miners, they pay the real costs for mining cryptocurrency instead of just subsidized, especially since that's money that's going out of the country probably and into mining. So basically the country is losing not a lot of money, but just they're losing money, and the more people move into the area of cryptocurrency, it's not fair for the government. So understandably, and I think this is fair. Fair. Talking about fair or unfair, Bittrex disabled the all New York based user accounts and assets are unrecoverable, which is quite unfortunate. They did put some notices about that accounts for New York based traders will be closed, and they actually closed these accounts. Bittrex is officially unavailable for New York based customers. User accounts are closed, and unfortunately, if someone had their coins on that account and is a New York resident, then he cannot access these funds, which is very unfortunate. So you're saying if I had money in Bittrex and I hadn't seen this till today, you would keep my money and make it inaccessible, says a user on Reddit, which is very unfortunate. So people who have not seen that the accounts are going to be closed and they still got funds on this account, well, I wonder what kind of proceedings they can do to actually get their funds back. So hopefully, not too many people are affected by this, but it's unfortunate, and it just shows that the regulatory landscape of the US is it has a lot of catching up to do. Otherwise, they're going to be left behind in comparison to many other crypto positive countries. So hopefully, people that have their funds on Bittrex can get it back. And the other thing to note is if you have a lot of funds on an exchange, I know this is like beating a dead horse, but make sure you don't have too many funds on an exchange, because if the exchange shuts down and so on, and you don't have the keys to your coins, then you don't have your coins. So not your keys, not your coins. And you probably had that often. So very unfortunate, but hopefully people will manage to still get out of this unscathed. Now, talking about the crypto market in a more positive light, and that's with Tom Lee, and he expects BTC to hit $40,000 after it gets over the barrier, the resistance of $10,000, and that's a very optimistic price. And he brings quite a good arguments to why this is the case. And in a recent podcast, Weijo, Binance CFO, as a host, Thomas Lee said that Bitcoin could reach $40,000 once it passes a $10,000 resistance. And one of the reasons is FOMO. So FOMO will make the price rise 4 times. The famous financial expert believes that should Bitcoin gain momentum again, it will move from $10,000 easily and double its price. FOMO will be the trigger in this case. And I mean, it is something that we saw during the 2017 bull run, that the biggest leaps in price happened like during a few hours, a few days, and that's his reasoning. So as soon as we reach the level of FOMO which we had around the 17th of December 2017, where BTC actually moved in a matter of hours or a few $1,000s up to 19,000, actually $20,000, and BTC moved up from $11,000 to $20,000 in a matter of 1 or 2 days, and that's his reasoning. So only 3% of the days during the bull market is going to be those days with a massive increase in price. So if we take his tweet, we are apparently headed straight for a level 10 FOMO in the Bitcoin market via Fundstrat. And this image is the one that he's got here. So he compares the previous bull runs. So you've got the 2010-2011 bull run with the the baby level 1 FOMO, that's around $6.50, and the level 10 would be around $9.25. In the 2011 to 2013 bull run, it starts at the baby level of $132, medium $145, and full-blown FOMO is $200. And here this the percentage of days of the complete bull market. So if you take all the days from the beginning to the end of the bull market, only 3% of the days are full-blown bull market. And in his opinion, we're at around a level 5, around $8,350. So still a lot of potential to grow. And the thing is here, if we look at the 2017 bull market with the full-blown degree of FOMO, and that was around $4,500, which we reached in, I believe we reached that around August 2017. So that just left a few months left to reach the $20,000 price tag. So now we'll be around, we're actually below yeah, we're around the 8,000 US dollar level, so a bit below this level 5. And if we pass the 10,000 US dollar level, then we're going to be at level 10 FOMO. So many people are going to enter the market, and that's yeah, it's in one point it's a bit unfortunate that people only enter the market just because of FOMO, but human nature is like that, and people will just pile into an asset and so on based on their greed factor. In one point, it's a bit unfortunate because it means that people will be losing a lot of money after that the bull market has finished. But I guess that's in all asset classes the same. The thing is with cryptocurrency, it's just much more volatile. So especially the end of the bull market, where you're going to see massive increases in price, it's going to be very difficult to time the market at the very top. So buying in, you're probably going to have a lot more time to buy in. And but yeah, so in my opinion, if you're entering around the level 1 of FOMO and before, then you're already set. You've got a good hedge for the next bull market. Going back to this post, so Tom Lee explained to Wei Zhu, Binance CFO, that the Bitcoin price surge will be quick enough in the current situation. This is typical for markets of this kind. As Lee said, in less than 4 months, he believes Bitcoin may surge from 10,000 US dollars to 40,000 US dollars, provided that it manages to take the historical resistance at the 10,000 US dollar level. Now the question is, of course, if we're going to reach this 10,000 US dollar level until the end of this year, are we going to retest different price levels around the 6,000 US dollar or even lower? That's it's something to speculate about. But yeah, if as soon as we entered the bull trend and we managed to pass this 10,000 US dollar level, then I see this this prediction as pretty accurate. So that was it for today. Hope you enjoyed this video, and as always, stay safe and enjoy the rest of your Monday, and see you soon in the next video. Bye bye.